the US withdrawal from 66 global organizations the biggest shift in global economic leadership since Bretton Woods? Good morning and welcome to another power-packed episode of Business Week. This past week, shockwaves across global markets as U.S. forces captured Venezuela President Nicolas Maduro in a pre-dawn military strike, with Trump calling it the boldest American operation since World War II. But while the world braced for an oil price spike, Brent crashed to $60 on fears of a supply glut. Meanwhile, Saudi Arabia makes a historic move, throwing open its capital markets to all foreign investors without restrictions. And speaking of capital markets, Nigeria's stock exchange breaks records, crossing the 100 trillion naira milestone for the first time in history. In other headlines, Ghana's inflation continues its winning streak, down for the 12th straight month to 5.4%, while Israel taps post-war investor appetite with a $6 billion bond raise. And in a sweeping shift, Trump pulls the U.S. out of 66 international bodies, including the Paris Climate Agreement. Back home here in Nigeria, KPMG flags serious errors in Nigeria's new tax laws, and Shell oil company snaps up more Angolan offshore assets as Venezuela hints at flooding the global oil market with cheap crude. Later in the show, we unpack all the intrigue around the big question of the week and what events in Venezuela mean for Nigeria and global markets. Well, if you missed the big business stories of the past week since January began, don't worry. I'm Rolake Akinkube-Fulani, and I'm here to help you catch up as always. Stay tuned. So we start, as always, with a look at global commodities. First of all, Brent. Let's take a look at Brent. We did see a serious market rout. Brent did actually slip on Monday, shortly after the Venezuelan brouhaha, but prices did recover somewhat, but we're still around the $61, $62 mark. But week on week, there has been an increase. Friday to Friday, Brent was up by 5.82%. WTI was up by 4.78%. Natural gas didn't fare so well, down by almost 10%, and RBOB gasoline up by 6.55%. Today's program will have a lot of oil markets, so we'll talk about what all these figures mean, because we've seen prices really come down to the $60 per barrel mark, and the prognosis for this year is not looking too good. Let's scoot over now to the NGX, Nigeria equities markets. The NGX kicked off 2026 with a proper rally. Prices have been up. Participation has also been up week on week, but the big ticket checks were lighter, as you see there, with the number on the values down week on week by 25.83%. All share index, of course, jumping by 3.71% week on week, and the market capitalization was up by 3.84% to close at 103 trillion naira. We'll be talking about that with an analyst later. Let's look at equities markets from Africa. Yes, Africa. Africa is the next one to look at here. It was a green sweep, a clean sweep of green across the continent. Kenya led the charge. South Africa stayed steady, and Morocco keeping pace there as well. The JSE in Johannesburg was up by 1.74%. Ghana edged up by 0.42%. Kenya's Nairobi Stock Exchange outperformed all the others with a 2.4% gain, and Morocco's Massy rose 1.36%. So lots of measured optimism there rather than euphoria. So let's see what happens week on week in the next week. Let's scoot over now to Wall Street. Wall Street leaned into the cuts are coming narrative. Will we see the Fed really go on a cutting streak in 2026? So let's see what happened here. The Dow Jones Industrial Index was up week on week by 2.7%. S&P 500 rose 1.68%. And the NASDAQ added 1.88%. I'll be talking about Alphabet and Apple, that whole competition for market capitalization. Well, it seems like investors are taking comfort from softer jobs data and the implication that rate cuts in 2026 do remain on the table. That's it for our commodities and equities. Now to looking at our top picks from around the world. Now, the first story here is really the story that Ghana has issued a historic 10 billion CD domestic infrastructure bond. Why is this very important for Ghana? Well, Since the post-IMF recovery, Ghana tapped into a $3 billion IMF bailout program, and it restructured around $13 billion worth of debt with external creditors. And so this debt actually means all that restructuring has meant Ghana's debt has fallen from about 105% of GDP to 75% of GDP. So the country is heading in the right direction. And part of the infrastructure domestic debt issuance is also to reduce the burden of borrowing in foreign currency, which is part of what caused all the debt challenges we saw in the 23, 24, 2022 period. I was talking about the IMF bailout and the restructuring of $13 billion worth of debt. So borrowing domestically and tapping into domestic CD, local currency markets, is a major improvement on its total debt outlook and profile. What will the money be used for? Infrastructure spending, roads, ports, energy transmission, and whatnot. Ghana's GDP was also up by 5.5% in the last recorded quarter. We've also seen inflation come to about 5.4%, down 12 straight months. Now, I think this is really a great and interesting one. And actually, the yields on the Ghana debt are estimated by market analysts to be between 22 to 25%. Now, if you think of the fact that inflation is at 5.4%, the real yield, when you account for inflation, is actually a very healthy and robust 16 to 19% there on CD debt, local currency. So great news there for the Ghana market, and of course maybe a sign of continued uptick in local currency debt issuances in the West African market. Let's scoot over now to my next story on the top picks. Another debt story, this time Israel, the Middle East, for the first time since the post-war era, and post-war in quotes, because I'm referring here to the ceasefire that took place last year over the Gaza conflict. Israel has issued a $6 billion bond, which was oversubscribed by about 3 times. Around up to $18 billion in bids were received for that bond. And it's the first international bond issuance, as I mentioned, that the country has tapped into since the ceasefire in Gaza. Now, the yield on that is about 200 basis points above U.S. Treasuries. That's still a geopolitical premium, but Israel's still attractive. We expect many of the investors there to be U.S. pension funds and some other institutional investors from the Asian market. It's also maintained an investment grade rating from the top 3 global ratings agencies. And the idea is that it's going to use need to fund post-conflict reconstruction costs and also try and reduce its ongoing deficits. So another interesting debt story there from Israel. What else do we have in my top picks? I think there's a third story here, and this is the one that we also examined on other business programs on Arise during the week. The market capitalization tussle between Alphabet, the Google parent company, and of course Apple. So we're looking at 2.2 trillion naira at one point during the week versus Apple's 2.1 trillion naira. It's quite close and tight competition. And the big news there is Alphabet has really leveraged its edge in AI. Of course, you have AI products that Google is pushing out, like the Gemini AI search function, amongst other things. That's really allowed Alphabet to boost revenues from AI. The other interesting thing is that Alphabet is not as exposed to the Chinese market as Apple is. You'd have seen that the iPhone sales in the Chinese market have really been pipped to the post by the likes of Huawei's 5G revolution in that market. So exposure to Chinese market headwinds is also affecting Apple's chances here. And of course, investor messages, you need to own AI infrastructure if you want to play the value game on the stock exchanges. So interesting development there. And of course, that number will move depending on how investor sentiment materializes in the coming days and weeks. And finally, my final top pick today is probably the most important one, which I talked about at the top of the show. And it's a fact that Donald Trump's government has pulled the US out of 66 international organizations. Now, for those who follow international politics and who are proponents of multilateralism, this is a major shift in the world order, if you like. Now, it's not apocalyptic, but it's pretty cataclysmic when you think of the fact that about $18 billion worth of funding for the UN comes from the United States. And many of the UN organizations are amongst the 66 international organizations that the US has pulled out of. I think, in my mind, the most notable one of this will be the UN Climate Agreement, which has major consequences for climate consensus around the world. We talked about that in earlier shows and last year, but also Standout exits also include exits from the UN Population Fund, labor and migration organizations. Now, these are key domestic themes in the US market. So we see that domestic pressure also playing on this decision. And I think the major one is really about capital flows. It's financial. The US has a huge debt exposure. It's trying to reduce that, trying to reduce its commitments to overseas development finance, which sometimes seems as odd with its interventionist approach in terms of global geopolitics, but we can discuss that on another day. But the bottom line here is that this is a major shift in the global economic landscape insofar as capital flows are concerned. And the big question here is, who is going to fill that gap? Interestingly, apart from being the biggest US funder, according to the UN, the US still owes UN bodies contribution arrears. How will they solve that now that they've pulled out of the majority of UN-focused organizations? Well, that's it for my topics from around the world. So let's now take you to some of our other top stories from around the world. First, starting in Europe, Eurozone inflation stood at 2% in December, according to flash data from Eurostat, which released this data on Wednesday. Economists polled by Reuters had expected the inflation rate to cool to 2%, in line with the European Central Bank's target. But in November, the inflation rate stood at 2.1%. Core inflation, which excludes more volatile energy, food, alcohol, and tobacco prices, stood at 2.3%. in the year to December, down from 2.4% in November, while the annual rate of services inflation cooled to 3.4% compared with 3.5% in November. In Saudi, the Capital Market Authority of the country has announced the opening of its capital market to all categories of foreign investors from the 1st of February, following board approval of the new regulations. This move enables non-resident international investors to participate directly in the main market, making all segments of the capital market accessible worldwide. Under the revised framework, the CMA eliminated the quantified foreign investor concept and discounted the regulatory system governing swap agreements, which previously allowed only economic benefits from listed securities. As a result, all categories of foreign investors may now directly invest in shares listed on the main Saudi board without meeting specific eligibility criteria. Ghana's consumer inflation slowed for the 12th consecutive month, falling to 5.4% year-on-year in December from 6.3% in November, the Statistics Service said on Wednesday. Government statistician Al-Hassan Idrisu told a press conference that while inflation pressures were coming down across most major components, the drop was mostly driven by a slowdown in food and non-alcoholic beverage prices. The West African gold, oil, and cocoa producing nation is emerging from its most severe economic crisis in decades. The economy expanded by 5.5% year-on-year in the third quarter of 2025, driven by an improvement in the agriculture and services sector, the statistics agency said in December. A historic surge in copper prices is delivering a major windfall for Zambia and the DRC, Africa's two largest producers of the metal. Prices have surged nearly 50% since early 2025, recently surpassing $13,000 a ton, significantly boosting government revenues and export earnings. This rally is driven by strong global demand from renewable energy and data centers, coupled with tight supplies. Shell plc signed a deal to acquire a 35% stake in two oil blocks offshore Angola from Chevron, subsidiary in the southern African nation. That's according to the London-based energy giant. The news came out on Tuesday, but the company Shell did not disclose the financial terms of the so-called farm-in agreement with Cabinda Gulf Oil Company Limited. The deal received government approval and is now pending final legal requirements, according to Shell. Nigeria Exchange Limited, the NGX, opened the year on a strong footing with stock market capitalization crossing the 100 trillion naira mark, buoyed by renewed investor demand and broad-based gains across most listed stocks. Commenting on the milestone, the group MD and CEO of Nigeria Exchange Group, Temi Popola, in a statement said the achievement reflects growing confidence in the Nigerian capital market. And finally, KPMG, a global network of professional services firms, says there are errors, inconsistencies, gaps, omissions, and lacunae in the new tax laws that require urgent consideration and review. That's according to KPMG regarding Nigeria's tax laws. In the newsletter, the professional services firm outlined several areas where revisions are required following a review of the NTA, that's the New Tax Act 2025. KPMG said of the NTA that specific persons on whom taxes may be imposed were omitted and used the term community despite the inclusion and definition of a person. This is just an example of the errors and inconsistencies that the firm said has affected the new tax act passed by the Nigerian government. Now, also in Nigeria, Nigeria's Debt Management Office raised a total of 1.144 trillion naira at its first Nigeria Treasury Bills primary market auction of 2026, at highest stop rates across all maturities amidst sustained investor demand. At the January 7 auction, the DMO, that's the Debt Management Office, raised 108.17 billion naira for the 91-day maturities, 48.23 billion for the 182-day, and 987.7 billion for the 364-day maturities. The auction results showed a clear upward repricing of the risk-free assets across all maturities, particularly at the long end of the curve, as investors continue to favor government securities as a hedge against inflation and policy uncertainty. Well, that's it for our top stories.